Hello, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research with Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Okay, guys, welcome to another exciting week, I guess we could say. I'm not going to lie, the price action has been kind of down only for the most part. Bitcoin has retraced most of its 2025 gains. It's now under $90,000 and down 11% for the week. ETH down 12% for the week, just to give you context. We did see, though, that Kraken announced a new $200 million fundraising round. We also saw that Grayscale has filed for a S1 for a US IPO this past week. And El Salvador and Strategy have announced that they are buying Bitcoin, despite these retracements. But as always, we're here to talk about the tokens, and so we will get right in. First up, we're going to talk about Aave. So Aave, the largest kind of DeFi money market project, they announced on Monday that they've officially launched a DeFi savings app aimed at retail users. So the app is promising to offer up to 9% annual percentage yield, APY, and insurance on deposits up to $1 million, which is kind of unheard of because traditionally you only get $250,000 of FDIC coverage on traditional banks. And even in DeFi right now, rates for most stablecoin lend borrows are around 4 to 5%. So 9% is very high. So the app it's available to download. Users can just sign up right now, though, and sign up for the wait list, and then they can verify their identities as well. Other features, this also boasts some other features such as bank connection, debit card onboarding, and those just aren't operational yet. Aave hasn't disclosed details, though, about the insurance sources or the app's yields. So the app's launch is not unexpected, especially since Aave acquired a stablecoin yield app, Stable Finance, last month. So this is kind of not coming as a huge surprise, but definitely great to see. I think the space has really been waiting for usable consumer apps. The app itself, I downloaded it myself just to see what it was like. It was super easy to use and get onboarded with. As it stands, Aave manages approximately 55 billion in TVL, but this figure could significantly increase if the new app gains traction among non-crypto users. Finally, Aave also launched the testnet for its V4 upgrade today, which promises to offer unified liquidity across its app, which is deployed on multiple chains. We'll have to see how that goes. Despite this, though, Aave got hurt real bad in this last week's sell-off. It is down 19%. Okay, next up, we're going to talk about Polygon. So this week, MasterCard announced a partnership with Layer 2 protocol Polygon to facilitate asset transfers between self-custodial wallets. So basically, MasterCard, like Visa, they've all been kind of dipping into the crypto space, trying to figure out what is the best way to use blockchain technology to their advantage. MasterCard actually has something called a crypto credential project. And the idea is that they are trying to get away from using public wallet addresses, which are a long string of numbers and letters, and using a standardized kind of username framework. But by doing this, they also verify these individuals with their usernames, and they link it to their non-custodial wallet within their MasterCard ecosystem. So this is an approach using usernames that long been is something the space has wanted. That's why we have things like Ethereum name service. But also you see this used in Venmo and PayPal. So it makes sense that MasterCard would kind of want to integrate this technology. So the MasterCard's goal is to kind of restore users' trust and confidence when conducting blockchain transactions, and getting a username to send money to makes this so much more familiar to people who, like I said, have used kind of these fintech apps in the past. The transactions are supposedly all the transactions for this are going to be processed on Polygon's network, which is pretty cool to see from an adoption standpoint. Polygon, though, it's down 17% for the week, getting smushed with the rest of the market. All right. Next up, we have 1inch. 1inch, if you don't know what they are, they're an aggregator for decentralized exchanges, which means that basically they sit on top of all of them and kind of aggregate liquidity from different sources. They announced on this earlier this week their newest product called Aqua. Aqua is basically supposed to be, they're calling it a liquidity protocol that's going to allow users to utilize their tokens across a bunch of applications without those tokens leaving their wallets. So this is kind of a complex topic to understand if you're not necessarily like crypto native, but basically a lot of the time, if you have a token in your wallet and you want to use it for one use, you can't really use it anywhere else, which of course makes sense. So the idea with this is that you can enable users to do a bunch of different things while still having custody of their assets. So one example, because maybe just a very basic example, say the user wants to loan out their tokens, but they also want to still be able to vote in governance with them at the same time. So this is the type of, this Aqua is hopefully going to allow these applications to exist. So currently Aqua is just available for developers to test and start implementing, and the full rollout is aimed for 2026. With this though, 1inch is down 12% for the week. All right, last up, we have ZK Sync. So ZK Sync is a layer 2 protocol that uses zero knowledge proofs, which we've talked about, helps with scaling and also privacy. They are currently holding a vote to actually expand the use case for their ZK token. So the ZK token in the past was totally used for governance. However, this proposal, which was put forward in early November, encourages the community to vote on broadening its application to generate revenue from various expanding business lines. So specifically fees from their on-chain interoperability and also their off-chain enterprise licensing would be allocated towards buying back ZK tokens. We're seeing a lot of buybacks happening right now in the market. This is one of many, but it's definitely good to see a layer 2 protocol pursue this, because to date they have really suffered and had a hard time generating actual usage for their token. The buybacks from this, though, would be directed into staking burns or other ecosystem funding initiatives. So the proposal is expected to pass with strong community support, but the final vote will finish on Friday. ZK token only down 4.6% this week. So clearly the market likes this. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.